Welcome back. A kind reminder to all our participants, do take this opportunity to ask questions to our speakers if you have any. For the next item on the agenda, we'd like to invite Dato Amirul Feisal Wan Zahir, Group Chief Financial Officer, Maybank, to share with us on the growth strategies and priorities amid a changed backdrop. Mr. Thilan Wickramasinghe, Head of Research Singapore and Head of Regional Financials Maybank Kim In Group, will be moderating this session. Over to you, gentlemen.
Thanks, Azhar. Listening to the previous sessions, I think it's very clear to everyone that we are not in Kansas anymore. Companies, businesses, and most certainly the banks have to work in and adapt to permanently change business conditions. ASEAN as a region is in the middle of multiple mega trends, including supply chain relocations, sustainability, and digitalization. We are going to explore how these trends translates into strategies and priorities going forward through the lens of Maybank Group, which has one of the widest and deepest footprints in ASEAN. To take us through this, it's our pleasure to welcome Dato Amirul Feisal, Group CFO of Maybank Group. Dato Feisal has over 20 years of global banking experience, working in multiple financial centers in London, Singapore, Hong Kong, and Malaysia. Prior to being appointed Group CFO, he has held senior management roles in a leading public listed company, a sovereign wealth fund, as well as Maybank Group's global banking franchise. He has a degree from LSE and has completed the advanced management program at Harvard Business School. Dato, welcome.
Hi, Thilan. Thanks for having me.
I want to start by taking you back to early 2020, Dato. We saw extraordinary measures being implemented by regulators and the banks at the start of the pandemic. There was imperfect information and the situation was fast evolving. Looking back, can you talk us through how, as a bank and as a management team, you prioritize strategy in terms of customers, liquidity, staff, as well as stakeholders? Are there anything that you would have done differently in hindsight?
Thanks for that question. You know, it was only yesterday. That's how I feel like, because we're still in lockdown in Malaysia. That was a very, very unique experience. When we kind of like knew what the government was going to do before it happened, because as you know, the central bank actually announced the measures in order to help. So we were all brought in. And the first thing that we started to do, actually, well before the government started doing anything, was we tried to ensure the safety of our own staff and the bank's resilience. So if you remember, this thing came out in January, etc., and the actual lockdowns in the country is kind of like what happened in March. But we were early February already doing split operations in terms of treasury arms, in terms of key operational centers, because we knew that it was actually not unusual. It was quite unusual. I think it was the end of January, so that was the case. But it didn't really arrive our shores that much at that time. So it's more the bank's resilience. And secondly, is about the people as well. Of course, when it did happen, then it shifted to our own resilience, our own staff, to our customers' well-being. Are they okay? What about communities? So we quickly marshaled a lot of the, whether it's ventilators, medical equipment, etc., whether it's just masks. So that's what we did initially. And we had weekly meetings. Every Monday, the ExCo would come and have weekly meetings. And one of the key things that we talked about was our own staff. So that's how we reacted. Our own resilience, people, etc. Now, is there anything that we would think that we could do differently? To be honest with you, I think we did the right thing. I don't think there is anything that would change. Now, there's one thing which, on hindsight, right? On hindsight, it's not just the bank. I think on hindsight, you know what, the whole country of Malaysia, for example, did the automatic moratorium. And that was done because we just didn't know how bad it was going to be. And with a total lockdown envisioned, what the ramifications were. So the whole industry can accept it. But from our perspective, just purely being selfish as a bank, when you look at it, with something so widespread, do we behave like a bank in a normal situation where we start foreclosing and calling people and it's like putting salt in the wound when it's not their fault? So naturally, one would think about their own survival because their survival is our survival. So that's something which is quite natural to do to assist them, and we continue to do that today. But whether it was blanket or targeted, that was that is a question which we can say we could have done better, not just us but the industry. But I think having that assistance fast and immediate was completely necessary at the time.
Dato, you bring up an interesting point in terms of the moratoriums and so on. I mean, there was an element of social service that the regulators expected from the banks in terms of liquidity and credit availability. I mean, some of the other ASEAN countries, BOT recently extended their COVID-19 relief measures and are asking banks to restructure SME loans. So how do you think the relationship with regulators will evolve as we go forward?
Well, I'll be very, very honest with you. I think this has not been it's not been like a top-down, thou shalt do this and that. No, it's always been in a very collaborative in a sense. It's been through a discussion. And like I said before, even for selfish reasons, it's actually necessary to help our customers ride the pandemic. And why we want that, again, purely for selfish reasons, is because this is not something that they ask for. They could be in a very good business, but because of a movement restriction, their businesses are affected. Now, if once things open, and this is the benefit of what we've been seeing in the past, when you actually release the restrictions and business come back on, they're there. They're actually making a business and they're actually earning a decent profit. So that's why it's a mutual objective of us trying to help them, because we want them to continue subsequently. Otherwise, we have no business. Now, there's always this question is how much help do we extend? Whether or not they can actually continue, are they permanently disrupted? And therefore, there's nothing we can do about it. Basically, it's not a viable business subsequently, right? So there is a cost to us. So even if we didn't help, all it means is we're gonna get hit sooner, right? Or more people get hit rather than less. So again, that's before the regulators coming in. Now, with the regulators coming in, it's actually quite helpful because then they ensure that we have sufficient liquidity. In some cases, when they want to extend credit, we become a conduit, we become a pass-through. So then we also have a business ourselves in channeling the funds that they've actually provided through us. So in that sense, I think it's, the relationship, at least from where we see, it's actually quite a good relationship and it tends to be more cooperative. And yes, same objective, difference in opinions on how to implement and how fast. That's natural in any circumstance, right? Yeah. But the good thing is we're trying to achieve the same goal, and that whatever that is decided, it's always through a cooperation, in my view. So I think going forward, if things recover, then it's the next phase, right? Which is basically the growth phase, and I think they will continue to be supportive.
So cooperation and support. I just want to remind the audience that if you have any questions, please post them on the Q&A box. Prior to the pandemic, there was generally a strategic drift amongst the top 5 ASEAN banks towards large corporates, to the premium customers as a way of enhancing risk-weighted returns. These segments now have become highly competitive, especially in this low interest rate environment. Do you think this sort of narrow sort of customer focus is still valid? And how do you think that will change over the next few years?
Yeah, that's actually quite interesting. It's very natural for everyone to gravitate to the opportunity, and therefore you have like a gold rush towards that area and becomes very competitive. But this is where we have to be careful, because when we look at the current situation right now, the pandemic, I think what we have to think about is, humanity has to live on going forward, right? It could be very different. So it's very dangerous to make quick, short-term decisions on some of these matters, because unlike, say a fund manager dealing in marketable securities, for us, we move very slowly. And therefore, it's not so easy to channel capital. We have to build the relationships, etc. So I think, going forward, while there would be competition amongst the wealth segment, right? But what we are doing is basically trying to find creative ways in order to access segments which may not be so obvious. And when I say that is, one of the things that we said in our M25 strategy is SMEs, right? And we all know that in this current environment, SMEs are affected. We all know that. And but it doesn't mean that we take a broad brush approach and just ignore that completely for the moment, because once we do that, it's very hard to come back in. And this is where we do have to have creative ways where our people at the branches understand the communities around them, having tools such as our SME digital tools. And we did launch a digital tool back in September last year, which I actually done, you get approvals within 10 minutes. Sorry, disbursement within 10 minutes of application, So you have those things in trying to find alternatives in order to capture the other opportunities rather than the obvious ones. So I think, from that perspective, yeah, everyone moves that way, but I think we're not just looking at that. We're looking at all opportunities.
Got it. I want to spend a bit of time unpacking some of these opportunities as we go forward. Let's talk about the future. Vaccination rollouts are progressing at very varying speeds in ASEAN. Singapore is set to reach herd immunity in fourth quarter. Thailand, Vietnam will probably take longer. This is adding far more uncertainty in terms of operating risks than what existed prior to 2020. So as a regional bank, how can Maybank calibrate its situational risk approach, especially compared to some of the large domestic-only banks?
I think the that's actually quite interesting, because in a way, by having a broader presence, we're kind of like diversifying that risk, the operational risk, actually. And for example, when you look at our footprint, Indonesia and Malaysia is perhaps on a slower path, whereas Singapore, I know the people in Singapore think they're at enhanced restriction, but compared to where we are, it's actually good. And I think the projection is actually a better recovery. So in a way, it's that uneven recovery, so to speak, does help diversify our own risk in overall. So diversification helps. Now, I think the other thing is going forward. It's really pacing ourselves as well. When we look at countries such as Malaysia, well, we have different types of vaccination herd getting to herd immunity. I think what it does help us do is manage our capital better. While we could be reserving a bit more, it does, when things pick up, so for example, it actually has an avenue for us to actually channel that capital for growth elsewhere. If I'm just a one country only bank, I'm basically stuck there, right? And whereas in my case, or in Maybank's case, I can actually better channel the growth opportunities and capital. So it's both risk as well as opportunity.
That makes sense. Also, you touched on the M25 plan, and you talked about wealth management briefly. The M25 plan, you're envisaging something like a 1.5 to 3.5% ROE uplift with new profit drivers by 2025. And private wealth is a critical component of this. But we've also seen some of the global banks and the Sing banks having built very sizable wealth platforms through organic and inorganic growth. How can a regional player like Maybank differentiate its proposition? And you also talked about being in all these countries. How do you kind of leverage that?
Thanks for that question. And I think, admittedly, I think the There were some opportunities that we didn't get. We missed out on those opportunities to actually leapfrog in terms of wealth, and what we had to do was actually to grow organically. But it is still a main, I guess, pillar for us in trying to get that additional growth. And now let me explain to you why and what are the differentiators as well. So first of all, the reason why is because when we actually look at our own clientele, there are segments which is like premier. You know, this is like the one below the high net worth, where as we actually gather more data and do more analytics and understand our customers better, we find they're very they could easily be moved up into the high net worth. So they're existing customers that we want to basically do more business with and therefore get a better return. And that's why we see that and we put that as one of the objectives for the 25. We already have them as our customers. We just have to realize it. Then there's the other opportunity as well is, again, we have a number of our business customers, whether they're in our business banking or corporate customers who are already on our lending side, but we don't take their personal business. And that is another huge opportunity for us as well. And this is where, in a way, it is a differentiator because we actually, being a bit more regional, being a bit more connected and nimble in that respect, we actually have an overall relationship, right? And then there's the third differentiator, which now this is based on preference, right? Why I say this is based on preference is because for us, being a regional bank, it's very easy to speak to our CEO. If you're in Singapore, for example, and you want to speak to Dr. John, who's our CEO in Singapore, you can. You can actually meet him. It's very personable. And less so if you're part of a big multinational. And because having that personal relationship, it does actually help. The service, the warmth, the fact that our RMs, for example, don't keep on bugging you trying to sell products, but actually a bit more warm, it actually helps. I can say the same about airlines. A number of people love Cathay versus Singapore Airlines versus Garuda versus whatever, right? It's a different type of service, and it will be the same as well. The human touch of it as well, apart from having a broader relationship. And yeah, there's a lot more that we can do with our existing customers, which haven't really done enough.
That's very interesting, the service differentiation that you talk about. I want to blend in a audience question here, and I think it's also kind of dovetails with the wealth side. What are your views on ASEAN financials embracing novel financial instruments like cryptos and SPACs?
Okay, let me just see this. Okay. So there's a few certain elements like that. SPACs is actually slightly different because they're actually pretty interesting. I think when it comes to financial instruments like cryptos, this is where it's an environment where there's I don't think the whole industry and regulatory environment, crypto and regulators are sitting comfortably together at the moment, and therefore it always poses a risk when it comes to that. Whereas having an avenue, an opportunity to channel capital to where it isn't normally accessed, or perhaps it used to be accessed through private markets, private equity. Now that's actually quite interesting because it actually opens it up to bigger investors. But again, if it doesn't sit well with regulators at the moment, that's something that we would perhaps wait and see, and that would be our view.
I think that's what a lot of the banks are doing as well in terms of crypto. Dato, the group financial, the community financial services business, the retail bank, is set to do some of the heaviest lifting in terms of ROE generation on the M25. We've seen some of the global banks like Citi and ANZ a few years earlier exiting this segment because they can't gain scale. Regional banks such as Maybank, DBS, a lot of them are coming out of this crisis with a lot of excess liquidity, capital. Can you talk about what opportunities this presents and whether we can see an acceleration of banks trying to buy scale?
Right. Actually, that's a very good question. I think, in certain markets, you might say that it's overly banked anyway, and you would have that situation for consolidation, not just for scale, but just to ensure that, they don't price each other out, so to speak, right? But even for scale, definitely it's an interesting part, because what we are finding is most banks are being very, very cautious in this environment and trying to do their reserves, which means that we have a lot more capital that we can weather the storm. But then if things recover, then we might have too much capital, in which case, buying opportunities become very, very interesting. But it's always a question of, it's speed, right? It's a question of speed versus value. Now, if you have too much competition for a likely asset, and therefore you have to pay top value, so value-wise plus the cost of integration may be too high relative to doing it your own. So from our perspective, it's always we're definitely on the lookout, but it has to make financial sense. I do think that it will be an interesting market post-pandemic. Not only will it be like a new norm, but banks would be looking at how to take advantage of it as well.
Do you think, just as we saw after the global financial crisis, where there was quite a lot of acquisitions going on for the smaller banks, we'll see something like that sort of scenario taking place? Or
well, would like to see what happens in terms of the asset quality and how people are behaving going forward, because unlike how it was before, right now a portfolio of a bank or institution, it may be a very perfectly fine portfolio before the pandemic, but then post-pandemic we don't know, right? So that's something that needs to be looked at more carefully.
Okay, got it. Let's turn our attention a little bit to priorities. We've seen with the past G7 summit as well, I think it was very abundantly clear that the relationship between the West and China is going to be very complex. The trade war is going to continue at some form. And at the same time, we're seeing this shift in terms of supply chains going from China to Southeast Asia. So from your unique point of view, what countries and sectors and corporates do you think are positioned to win from such a shift?
Well, first of all, I think the purpose of relocation is, I think, quite important as well. Diversifying risk, and therefore it intends to be manufacturing or high technology. And I think that the markets that stand to benefit would be those. One is perhaps a close affinity in both sides of the divide, so to speak, whether it's with China as well as the other countries. So that would be quite interesting, and having a very fairly developed local economy. So, I mean, Vietnam, whether it's Vietnam, Indonesia, etc. Actually, Malaysia is actually quite interesting as well, because we have a good infrastructure. The environment in Malaysia may not be as conducive and therefore stable, so to speak, and therefore other markets might take more advantage on that. But these would be the obvious markets, and those would be the sectors as well.
Got it. I mean, sitting in Singapore, I just want to get your opinion on what do you think about the Singapore-Malaysia corridor? Is that a beneficiary?
Oh, yes, it would be. A couple of things. One is, when you look at G2G relationship, I'll be very honest with you. I think the relationship between China and Malaysia is a lot better than in Singapore. And likewise, when you look at what can be done, it tends to be more broader, which requires more people as a market, etc. So Singapore has a tremendous amount to gain from having being the and I guess us as a bank as well, looking at the Malaysia Singapore corridor for sure.
Great. I just want to talk a little bit about one of the key ingredients of success with some of these supply chain shifts is integration across borders. We've seen UOB claiming that a third of their wholesale banking business actually comes from cross-border initiatives. What are some of the challenges in driving cross-border integration, and how do you think banking products and services are going to change with this becoming more of a priority?
Okay, thanks for that. Uh, so when you look at the a banking business and the opportunities for cross-border, the immediate two areas which tends to be better tends to be more of the larger corporates that have multinational business that capture that, and perhaps a very smaller segment of high net worth individuals where they actually, you know, in multiple markets. But that would be it initially. So so when you look at what opportunities there are, it's actually to support them either for trade, financing their operations across ASEAN, and a lot of it is, you know, from a bank perspective can be done already. But I think one thing that we do see where it might be a bit more difficult for the corporates to have a bit more cross-border presence tends to be more regulatory, you know, the moving people, for example, you know, moving people around, mobility across the region, making investments, making sure that they can invest and therefore extract money out as well. So I think a lot of it tends to be looking at our customers and the constraints that they have in looking at cross-border. And for us, we can only support for that. But I think as the larger community develops, and this is where we talk about the retail business, where people travel, and this is before pandemic, of course, when people could easily, you know, travel across the region, then it tends to be more the retail products. And this is where it becomes a bit difficult because of regulatory reasons, transferring money from one country to another with all the compliance requirements, that becomes a hindrance. I think those would be the challenges. And I think the ones that can actually capitalize on that, especially for us, would be how do we actually get around those issues.
Thanks for that, Dato. I mean, one of the areas that I always struggle with when banks talk about integration and you know, changes to strategy is how do you overcome the sort of traditional banking operational culture and KPIs, which normally emphasizes divisional and silo performance over the group?
Yeah, well, you know, it happens in every organization. It's not just in banks. Any large organization would have that problem. And you know, I always think that I'm not a big fan of KPIs, just so you know. And the reason why is because collaboration or integration within a group is nothing to do about the people or the intention or management. It's because you actually ask them to point in a certain direction, and therefore they move that way. And then you can't expect people who you ask to move in two different directions to actually connect. No. And I think that's the thing. So the important thing is actually to prioritize and focus and get people to come together to actually achieve the same objective. Now, I'll give you an example of how it can be done quickly, and that's the pandemic. So when you look at what happened during the crisis, everyone was just focused on resilience, their staff, making sure that we have the right structure, the place. So it didn't really matter which department or silo you worked with, but you made sure that you came up plans. You know, in our case, we have this thing where you have commercial business banking, which is non-retail, and the larger commercial, right? And two separate things. And from a bank perspective, it's very difficult for us to manage a non-retail portfolio when you have two different heads, right? And how do I manage my asset quality? But in this scenario, it didn't really matter because everyone just came on board. You know, it was quite seamless in a sense. So in order to actually drive that integration going forward is to get people to see the larger objective and move toward that. And there is a sense of urgency. Pandemic is one, digital move is another. Competition actually helps hone the mind as well, and it will get done.
And I want to talk about digital in a little while. There's a question from the audience, which I think is quite relevant. Which sector industries are expected to do well? Which are the sectors that will see some of the strongest credit growth in the next 2 to 3 years?
Okay, that is that's actually So the sectors, okay, then I'm sorry, I'm just thinking about this because it's actually a question of time, right? So the ones that did well immediately was the healthcare unit, and especially rubber gloves, etc. And now that's kind of like fizzled out. The next would be, I guess, the rebound that can actually capture the rebound itself. I mean, banks such as us, financial institutions, for example, a lot of the banks in the region have shown resilience in dealing with this. And when you have a recovery, then they would actually be there's a lot of liquidity, there's a lot of capital to capture that growth. In terms of industry, I think you would look at the in a way, manufacturing, those that actually supplied export. What we are seeing is production capacity has been limited, and as the global growth increases, there are segments that will actually continue to grow, and I think that's where banks would be able to support them with that credit growth as well. What we are even seeing today, for example, and this is quite interesting, although there could be a bit of slow, is even housing or real estate, residential. People realize that in a pandemic, it's kind of like hard to live in one big family in a small house, right? So
Yeah.
So that's quite interesting as well.
Great. Dato, I want to shift our focus a little bit to another mega trend, which is sustainability, and that's a key pillar of the M25 strategy as well. ASEAN regionally has a high exposure to brown industries, contributing to emissions as well as human rights, social issues such as mining, plantations, fisheries, mass manufacturing. How can a bank with a large ASEAN footprint minimize financed emissions? Admittedly, for a global bank, for HSBC, it's probably an easier job because you have a much bigger portfolio and you have a much bigger global footprint, so they can choose just to do green. How does regional banks navigate this?
Actually, that's a very, very good question. I think you mentioned two words which stuck to my mind: minimize and navigate. And why that stuck to my mind is because the HSBC having a global footprint, they can minimize and navigate away. In other words, you just move somewhere else, whereas we can't. But that is a passive way to approach it. And I think being a regional bank, we cannot be passive. We have to be a bit more proactive. And what we mean by that is we have to be the agent for change. We have to do something about it, right? Because we can't run away. And therefore, the conversation and the activities that we do is very, very different. So it becomes trying to bring along our customers to move along and transition. And they need to transition, whether it's power companies or whether it's certain, even plantation companies, they have to transition away from matters which does affect the environment, away from fossil fuel, energy, etc. And we, being a major player in the industry, if we talk about this earnestly with our customers and with our customers themselves, if we need to speak to either government or regulators, then we can actually effect that change and we can actually move it. So in a way, for us, we can't be passive. We have to be a more proactive role and lead it.
Yeah, no, I agree. There's an audience question here, just in terms of, and I think you kind of answered that as well, but what is the strategy towards educating the existing and potential customer base in terms of strategy, in terms of sustainability?
Thanks for that. I think so we started 2017 and 2018 already, because what we tried to do back then was to embed a lot of the milestones for them to achieve certain, for example, if it's plantation, whether it's MSPO or RSPO, we want to encourage them to actually meet certain milestones by a certain time, and have that embedded in some of the documents that we have. So it's really having that close one-on-one relationship with them. It doesn't have to be plantation, for example, like peat soil, even developers, for example. Again, it's useful for our for us to speak to them to stay away from Peatswell, anything at all where we don't finance anything on new financing on Pete. So it's that conversation, so they understand us, what our limitations are, what we stand for, having early known, whether it's through a public forum or one-on-one conversation, and move on from there.
Mm.
Yeah.
Yeah, got it. I just want to talk a little bit on the social aspects of ESG. There was a very interesting report by the World Economic Forum, the Future of Work report, that said that by 2025, the time spent on current tasks at work by humans and machines will be equal. This is due to the sort of double disruption from COVID and automation. So how do you think this will impact practices going forward in terms of hiring? And also, what does it mean for employees whose skills actually might be displaced?
That's a very, very good question. And this is part of the transition, right? We talk about a new norm, a new normal going forward, and the pandemic has accelerated all of that. But anyway, it's good that we have the acceleration so people actually see it. And when people see it, people do something about it. But we are responsible, and this is something that we have to do. We can't leave anyone behind. Even for us, for example, I mean, it's quite clear. It's quite clear that even the branch network, the footfall into the branches, it has actually dropped. In the pandemic, we can actually afford to reduce the number of branches and still provide a service. It may not be optimal, but we can still provide a service. But it's the change in behavior of how we work. But let's not forget, while we have automation, and we have it in the bank as well, a lot of RPA, a lot of automation that we have, and a lot of things are being done. There is still a need for the human element. Every single customer of ours are still humans. And we're social beings, so they would like to have some form of human interaction. The stuff that they can self-serve, fine, automate. But ultimately, the higher level stuff, you need the skill sets. It's our challenge to make sure that the people who used to do more operational stuff are then skilled up to do something a bit more interesting. And that's our responsibility.
Mm.
And I think we take it upon ourselves not to leave it, not to be passive, but to take the lead in doing that. So within our organization, we do have future skilling. We teach them new skills, I guess, beyond that, what we're doing.
Mm. So it's interesting you mentioned future skilling and the sort of changes that you're doing, and that there's an audience member who's asking, how is the pursuit and pressures of sustainability, ESG, going to affect cost and allocation of credit and capital?
Okay. So one is cost, and then after that is allocation of credit and capital, right?
Yeah.
So when it comes to costs, and this is the easy bit. I mean, when there's a cost to carbon footprint if you try to reduce it, and therefore there's less cost. Simple as that, right? So it's actually a good thing, and try to make sure that we achieve our ESG targets. So there is that benefit. We recently came up with a commitment of net zero carbon by 2030, and then carbon neutral by 2030, net zero by 2050. But on the carbon neutral of our own footprint, we have a team looking at how to implement it, and they needed money to do stuff, whether it's LED lighting, or whether it's some form. But most of it, to be honest with you, is self-funding. Mm. So while there's investment, there's actually cost reduction, and therefore it is self-funding. So that's on the cost aspect of it. When it comes to credit and capital, and this is where it is a case of transitioning. We allocate some credit and capital on new opportunities, and we also ensure that existing base moves as well. The most common question I get is, what does that mean to your bottom line? Mm. Are you gonna lose out? Are you gonna lose money by saying no to all these things? Well, what I would say to that is what we've been experiencing so far. First, risk management. it's actually good risk management to pursue ESG objectives sooner rather than later. From a credit perspective, if you actually fund an old building, or you actually fund plantations with peat soil, you're at risk to stranded assets as collateral. In terms of opportunity, we can see we're at inflection point and people are moving. So we're actually far ahead, and therefore we become a market leader and become lead that market. So I don't think it would be a big impact as long as we transition responsibly.
Just staying on that, Dato, where do you think some of these stranded assets will eventually end up? I mean, I think a lot of the regional banks and the global banks are, pushing that away. So where do you think they're going to land?
Well, that's what I mean by transition, right? So it's very interesting because we've had an experience of a coal mine operator, and slowly the amount of credit is shrinking and shrinking, but because it's transitioning, the amount of capital that that company has is actually quite a lot. So it basically has enough money or equity to fund the continuity of that, but enough to actually transition away from coal and into a new technology. So it has to be gradual, and what we hope to see is not will it end up anywhere, but it's no longer needed. As long as we transition properly.
Great. I'm aware of the time, so I just want to squeeze in a couple of last questions here. And I want to talk about technology, which is also one of the key sort of mega trends in ASEAN. We've seen some of the platform players like Grab and Sea gearing up to roll out digital banks. They've got access to a lot of data. They have the ability to bundle, and they've got corporate cultures which are risk-taking. So how can traditional banks respond to this, and how can you actually differentiate in terms of the value proposition?
Thanks for that. I think that's right. I think the natively digital companies understand the value of data, and therefore they collect it for that intention to actually harness it. Whereas for a bank, it's slightly different because we're kind of like have a huge network and part of an ecosystem, but we haven't been collecting data for that purpose, for business purposes in risk and compliance, right? So how do we manage it? And I think it is that change. It is managing a change internally for us. And the risk to us is we don't do it fast enough. Now, what needs to be done? Infrastructure, systems, that's something that can be done quickly. Even for us, for example, we've already installed it, everything is fine, we're moving to that. I think the harder thing for us in competing with the with such organizations is, I call it a Pavlovian conditioning by regulators in terms of meeting rules, compliance, etc. And we do that so much that as a bank, we're so worried about compliance, we no longer think like entrepreneurs and be free from that, right? Mm-hmm. Whereas, SEAs, as they go into digital, they have that freedom. And I think for us, an organization is how do we actually create a system within the bank where we protect the team from the bureaucracy, from that pain, but do it responsibly. And allow us, for example, for Maybank, our group president is looks at that personally, and there's a lot of green laning done in order to get things done fast, and that's how I guess we would compete in that environment.
Mm-hmm. So I mean, it's still using the infrastructure that we have, and obviously I think the trust element also has a significant advantage, I would imagine.
Yes, it's having the trust, the resilience. Having that trust, the experience, the existing network, and just moving faster.
We have only about a minute to go, Dato, so I just want to ask you 30 seconds. What does collaboration mean to you? I mean, clearly the regional rebuilding post the pandemic is larger than any bank or government. How do you think interregional cooperation, particularly amongst the banks, will evolve as you go forward?
mutual interests. Yeah, I think it's basically realizing that it's actually pretty frail to be on your own, and therefore having a mutual interest to either collaborate in terms of markets, in terms of products. And this is something, to be honest with you, the tech companies do well anyway. They call themselves frenemies, right? They actually collaborate to fight be competing.
Yeah.
And I think that's it. It's having a mutual interest and putting other stuff aside, and to benefit from each other. And I think post-pandemic will be a very interesting landscape for that to happen.
Okay, so a lot of banking frenemies to look forward to. With that note, I'm afraid we've run out of time. So Dato, thank you so much for joining us today and for answering all the questions. There's still quite a bit of questions that we couldn't get to, but thank you very much for joining us today.
Thank you. Thanks, Thilan.
Okay. Thank you, Dato Amirul Feisal and Mr. Thilan. Ladies and gentlemen, our next topic will focus on ESG investing in ASEAN, risks and opportunities. This popular topic will be hosted by Mr. Ong Seng Yao, Regional Head, Research Technology and Innovation, Maybank Kim Im Group. Over to you.